won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. Okay. I just want to talk to you guys about the purpose, right? Your purpose when you come to the charts as a trader, and what really truly allowed me to catch this trade was not my ability to gauge the market correctly, but to be able to understand that as a trader, it is your job to come to the market and make an executive assumption of the market and the price action that you see based off of logic, based off of the price action that's being displayed to you with no outside influence, and then being able to react to the market, again, based off of your assumption of it, based off of what you see with the sound, proper risk to reward. That's literally all trading is, okay? But people make it so much more complicated than that because they're always trying to force something upon the market that the market doesn't necessarily care about. And that comes in the form of buy and sell positions, okay? So moving in tandem with some of the CYPRX confluences that I showed you all today, I was personally able to catch a buy position during this New York session. So really, again, just all boils down to what you're accepting and willing to risk, what it is that you're analyzing in that current moment in time, and if you have the guts to react to it. That's really it. And then obviously, of course, gauging in a logical risk. Okay, that means not exposing your capital, really truly understanding the value behind that, not trying to make money quick, risking 1% to 2%, slow and steady gains over the long run. And everybody coming into the market, they want these fast, quick gains. Let's start off on my position today, the position that I took. It was roughly at around down here in this general vicinity. Alrighty. So we're going to go down to the lower time frame after I explain to you guys what I was personally seeing on the 10-minute chart. I'm just going to draw that little area on the charts. This is where I entered in at. I'm entering in on a fractal pullback. Okay, so this was 9:30 this morning, Pacific Standard Time. That is where my entry was. Now, I didn't enter at 9:30 exactly. I actually entered in fractally with a buy stop, and I'll go over that in just 1 second. And I took profit at this order block. We violated a fractal high, and we filled in all the imbalance in this higher time frame candlestick on the 10-minute. Okay, so realistically speaking, I was kind of catching a reversal because the market wasn't ready to give the bullish move that I think is coming if we break above this 50 moving average, which would be a move, if we hold this type of support level, quote unquote, it's the 500 psych level over to the right hand side. You guys know that I don't like utilizing the term support and resistance, but just for simple sakes, right? When I'm talking about that, I'm talking about psych levels. So we know the major psych levels over here. So that came into play this morning with my entry. Okay, there's the 500, which is a major. All right. And what I'm expecting for the market to do is come in and fill in some of this bearish downwards pressure because the higher time frame is still bullish. The reason why overall higher time frame that I was taking this buy position was from the breakdown that I did yesterday. We failed to break those higher lows in the market from where previous banking institutions during New York session bought from. So right now, to me, it looks like the market's either doing one of two things. It's reaccumulating to go higher, or it's distributing, that was a hard word, distributing to go lower. Okay, this is either going to be a distribution schematic on the higher time frame or an accumulation schematic. Right now, price is moving sideways. Okay, you guys can see that, right? Price is technically moving sideways right now. So if you look at the bottom of this consolidation or this sideways price action movement on the 10-minute chart, every single session from session to session, the market is pretty much ranging to the top of this box, to the bottom, to the top, to the bottom. Right? So why I took this buy position was because New York session took sells from highs, which was logical because that's where they sold from. They're literally selling from a profit. You see, this is where they sold from yesterday. They came, they violated those orders, and then they sold from a profit. Okay, or a premium, collectively speaking, where London session sold from. Okay, I'm just for everybody that's watching right now, I'm breaking down why I took buy positions this morning. So I'm breaking down my logic as to what it was that I was seeing. Okay. So we already see that they took sells from highs. Look at where price action was when I entered. Why would I want to be selling when the banks sold from up here? Okay. Which is where the banks from London sold the day before, which is higher than where the banks of New York sold the day prior. Okay. Or previous. Right. So I don't want to be a seller because I already missed that move by the time I came into the market. So what I was looking at is these areas of interest over here to the left-hand side, which is where 2 previous New York sessions bought from. We caught this move Monday. We caught this move Tuesday. And now coming in to this New York session, we were operating again at those lows. Okay. So that's one confluence. Second was identifying key areas of interest where the previous banking institutions bought from. So now we're going to go over that, deleting this, where London and New York took sells, deleting the consolidation box. Let's just go over the previous day's worth of price action. The previous day's worth of price action shows us in this area to violate lows. Okay, here's that low violated in the market. This is again bullish order flow now until this low is broken. Okay, so until this low during Asia session is broken, higher time frame is bullish. Why? Because the previous day's worth of price action, any orders beneath this low got liquidated during the market reset. Here's the market reset, this general vicinity right here, which I teach you guys. We see Asia session manipulation window set up liquidity traps above highs, early buyers beneath lows. They liquidate those lows, shift momentum, breaking a previous market structure. And then what do they create afterwards that I teach you guys to pay attention to right here? Can somebody give me that answer? What do I teach you guys to pay attention to after the market does this type of pattern? Liquidity trap above highs, market reset, liquidating early buyers beneath lows, shifting momentum, higher time frames bullish. What took place here? Cool. I'm talking about this one right here.
That's a higher low.
Yep, it's a higher low. It's a higher low after the new day's candlestick starts that shifts momentum and continues with bullish order flow, higher high, higher low. So now during this New York session, okay, for me, because I'm a trader that trades with the higher time frame. You guys always have to remember that you have to keep that in mind when I'm trading. For me, higher time frame is bullish. That's just my bias. Could be bearish for you. It could be bullish for you. Who knows? That's your job to determine that. For me, I see buys. Okay. And so based off of what this New York session did, which is they bought, then this Asia session bought at a discount underneath of this New York session, liquidating all of these orders, and then broke a previous market structure high, which is this high here. So now we have a new liquidity grab, A to B move that showed us that buyers are in control. So as long as the price on GBP/JPY is above these two, 1 and 2, I'm going to be a buyer. That's just me. Okay. The higher time frame for me is not bearish until this level breaks. Because if we go to the, let's say, hourly, okay, look at these two yellow areas. This is a higher low. Do you guys see this? This is a new leg in the market on the hourly chart. A to B. Fractally, these are the two areas that we've identified now. So why would we be bearish above these levels when the market is showing us the willingness to make new legs in the market or new swing highs to swing lows? Okay, so now that you guys see my higher time frame perspective, all I was simply doing buying in this area roughly at around 9:30 was I was buying at a discount, taking my Fibonacci on the higher time frame from this higher low that we identified fractally on the 10-minute from the low to the high. And you guys can see I was buying at 79% discount, or roughly just in that area with that in mind. Okay, that's what I was looking at. And so now, why am I expecting this to move higher? Because if we take away all these drawings, okay, let's take away all this purple crap. Freaking hate drawings on my chart. I don't know how people do crazy. People will really sit there. People will really sit there with all this on their charts and think that they're about to make money. You're not about to make money with all that on your charts. No way. You're so distracted. If you can do it, I'll give you a round of applause because I won't be able to. Okay, so if we break above this 500 level, like I said, we have imbalance in this higher time frame candlestick. We're either going to do one of two things. We're going to come back and retest this so banking institutions during Asia can collect up short positions. That's if this is all if we hold above this 50 moving average that's moving sideways right now. Okay, we're going to do one of two things. We're going to do something like this, or we're going to do something like this, which is going to equal out this momentum, or we're going to do something like this. That's what I was seeing in the market, which is why I was reacting fractally to this price action. Okay. This was my assumption of the market. All right. And so now let me show you guys how I reacted to that. All right. So higher time frame bias out of the way. Remember that I said to you guys at the beginning of the Zoom call, okay, our job as traders, I stopped sharing for a second. Our job as traders is to generate an assumption of what the market's going to do during our specifically design session that we approach the markets to trade, okay? And then your goal is to be able to react to that assumption based off of a certain set of rules, okay? So now let's get into the lower time frame. Now that you guys have my higher time frame bias, okay? So hourly for me was bullish based off of the environment that we're in, okay? I'm not saying that it is. What I'm saying is that that's what I was seeing. Previous New York session buy areas, those higher lows in the market have not been broken. So for me, I'm just going to continue to remain a buyer until that momentum shifts. Then if it shifts, I'll reevaluate. It's that simple. Okay, you don't want to be trying and attempting to sell these positions up here unless you have the control, which you should know by now, if you can be that type of person. For me, I don't like creating a stressful environment when I trade, so I just sit on my hands and I wait. For others, you guys may like that intense type of trading where you want to be involved in every single position. There are people like that. Don't get me wrong. That's how I was at the beginning till I realized I'm going to have a full head of gray hair and a heart attack by the time I'm 40. So I stopped doing that. Did I make money off of it? Yeah, sure. You can catch positions off buy and sell, buy and sell, buy and sell. But that's just not how I trade anymore. So there was a nice, beautiful little short position here during yesterday's New York session. But the overall direction of the market, you guys can see the bulls completely overcame. If you measure this from the candlestick body close to the candlestick body low, candlestick body close to the candlestick body high, you guys can see that the bulls in the form of candlestick bodies, because those are the closes of the day or the close of the candlestick in that time frame, outpaced the bears. Do you see that? Okay. So we're still bullish, technically speaking, right? That's all I was trying to get you guys to see. 10-minute chart we went over. Okay, let's get into the 5 and the fractal chart price action. Oh, sugars, the freaking the sprinklers turned on outside. My daughter freaks out. Did the sprinklers turn on? I saw you run for the door. You cracked me up. Okay. 5-minute chart. What was I seeing? Okay, so right here, this is where I was seeing that grab a liquidity and then being able to react to that fractal price action going down to the 1-minute chart. This was the higher low that I was looking at reacting to. All right, so here's the low that was pre-engineered into the market. Okay, we have a triple touch of a trend line above highs, which it doesn't realistically matter how slanted it is. You guys know that retail traders are most likely taking sell positions, okay? They're taking sell positions from this trend line. They're fractally chasing bearish price action. They didn't get in on this sell position, so they see the market come back to another touch of a trend line, and they're like, oh my gosh, another opportunity, boom, which is fine. If you can scalp this type of price action, cool, so be it. I just personally can't. I wait for this pattern, and I don't touch the market till I get this pattern, and that is a violation of a low. Failure to break a major 200 psychological level, which comes into play. You have to see that. You have to be able to identify that we failed to push into a major psych level, because that becomes a confluence. That becomes a reason as to why a trade can go in your favor. You have to generate as many reasons as you possibly can to trust in yourself. If you don't, you will have a hard time coming to psychological terms and confidence with yourself and your analysis. You'll start to be the type of trader that second guesses yourself. You'll close positions because you're like, oh my gosh, it's floating in the stop loss and I don't think it's going to go my way. You do not want to become that type of trader. Okay, you do not want to be that type of trader. You want to be able to trust yourself in this market, because when all else fails, who else are you going to trust? Okay. It should be not your mom, not your dad, not me, nobody but yourself, your own judgment. So you're building those confluences in order to do that. Rejection of the 200 level. You grab of a low. 3 highs above previous lower highs. Okay, so now we have a reason or targets as to where the market could potentially go. Right? Now we're going to jump down to the 1 minute. Okay. So now that price is in our higher time frame discount area, which is something that you have to be patient for to wait. Okay. Remember that higher time frame area was roughly around 62 to 70% discount, which is down here in this general vicinity. So you need to wait till price action even comes into that general vicinity. All right. That's all in the higher time frame. As soon as price matched bullish momentum, okay, here's the V-shaped recovery, bearish leg. This is the manipulation move, match of momentum. Now we have a liquidity trap set above highs. Okay, so now the market makers have showed us that they have no interest in lower major cycle levels and instead have an interest in pushing price higher based off of manipulating early buyers, setting up sellers, resistance traders, and then showing us the willingness to facilitate more buy orders to drive price higher. Now we have a new A to B move after the grab of liquidity. It's the same pattern on the higher time frame that we saw, now on the lower time frame. All I simply did was after I saw all this price action, okay, I waited and I said to myself, okay, well, it's about 9:17 a.m. Right? Look at this high, 9:17 a.m. Is price at a discount? No, it's not. So what am I going to do? Well, I'm going to sit on my end. I'm going to sip my coffee. Whatever it is that you're doing, you understand as a trader that this is where they bought from, here in this area. And at 9:17 a.m., this is where price was. Your bias is up. So if you want to get in on that move, you want to be buying from one of two lows, either this low or this low. That's it. That's it. That's all we know at this point. So I took my Fibonacci based off of what I teach you guys is to pay more attention to this low because we know that they're all on a time crunch. These banking elites are on a time crunch. So if they want to facilitate orders to a certain level, they're going to have to get there as quickly as possible. Okay. So most likely they're going to save time and they're going to just buy at a discount from where they bought from, moving price higher, taking profit. Coming down, buying at a discount, moving price higher, taking profit. That's how the market moves. Okay. So all I did, drew my Fibonacci from the higher low after the sweep of liquidity, A to B move, set myself an alert. Okay. I noticed that the 66.500 level was right there at 62%. So what I did, getting rid of all that, was I set myself a buy stop right above this bearish candlestick. Okay. So once the market dipped down beneath the 0.500 level, I said to myself, well, if the market can't close bearish below a major, we have a higher low formation in comparison to the previous one. We have our sweep of liquidity. We have sound psychological areas as to where the market could potentially target over here to the left-hand side. This is a good risk to reward trade. And I allowed the market to do its thing, enter me into a buy stop. My stop loss was right beneath this low. And I was simply just looking for a 1-to-3 risk to reward ratio. Now we didn't get that. Okay. We haven't gotten that. This trade would still be in profit if I didn't take profit and close the trade. But as soon as we violated market structure highs, which are right here, I said to myself, it's already late in the session. I made about $2,000 on this trade, made about 26 pips, 24 pips. Let's see. About 24 pips on this trade, closed it out. Boom. Easy. One and done. 1-to-2 risk to reward ratio. CYPRX Confluence is waiting for a pullback at having that analysis play out all in the form of time, patience, psychological levels, understanding higher time frame momentum, and being patient enough to wait for price action to come into your area of interest. Okay? Very simplistic.
I won't stop till I hear him say